In today's video, what I wanted to do was just to plant a seed of thought so that you can start thinking around certain issues and not just accept everything at face value. Society's got this way of programming you to think in a certain way, and if you don't start thinking for yourself and questioning what they're telling you, you're going to be trapped in things that they want you to follow. One of these things is a retirement annuity. In no way am I offering you financial advice, and I am just giving you an example from our lives and what we have decided to implement for our, I would say, retirement plan. And I did a lot of research around retirement annuities versus a property investment. And the retirement annuity, what I came to realize is that you set aside a certain amount of money every month into an annuity, or if you have got a pension plan, it's a similar principle. And then when you reach the age of 55, you're entitled to withdraw a certain sum and then transfer the balance of it into an annuity that is basically a lump sum that gets paid down over a certain period. So if you have maybe made a goal of 25 years after retirement that your plan is going to pay out, then you would have accumulated a sum of money, and that sum of money is going to be paid to you in equal installments over those 25 years. There's other options as well, and it's very detailed, so you can find out more information about that. That some of them will even pay you until you die. And if you die early, you lose the benefit of it, but that's the risk that you take with it. But the principle is that you put aside money and you receive a tax benefit up front. You do get taxed again at the end, but the way that they show you how you're going to be able to save more is because you're getting this initial tax benefit. So then you're saving this money to get to the lump sum. Then the lump sum pays out. If you had to put that same amount of money into a savings account, I worked it out at a low 5% interest, and what I saw was that the interest that you're getting monthly is equivalent to the payment that would have been paid to you for that annuity. What we decided rather to do is that we are going to buy properties and have a portfolio of properties that bring about a return on investment in terms of rental income, and they've got capital growth. So initially you're going to be paying into the properties, you'll have a slight loss every month, but that is also a tax deduction, and you can get the same tax benefit back as what you get on the RA. So the net effect up front is the same, but you have a double return, one in terms of your capital that is growing continuously, and the other one is that you have an income stream that is also. So you've got someone that is paying the property for you if you're renting it out, and then once the property is paid off, you have got a net cash flow every month that generates an income for you in retirement. The thing also is that what we decided was that putting money into a retirement annuity, all your eggs are in one basket, and if something happens, you're pretty much stuffed. But with property, even if the market goes down or there's a recession, your risk is spread across a very large base, because if you decide to invest in different areas, different types of properties, different cities, then you could have vacancy in the one area, in the other area you'd have occupancy. And if the currency goes to crap, you are still have a barter system with which you can trade. So that is what we decided to do. I wanted to just plant a seed of thought for you, and you can decide and make up your own mind, but just start thinking about the things that people are telling you to do. And if it doesn't make sense to you, start questioning it and do your own research and speak to advisors that can give you a lot more detail around the topics.